Hello everyone, welcome back to my channel. So this video marks the end of week number 38 in this Road to 100k Realized Return Challenge, and it was yet another negative week for us. Things have not gone the way we wanted, especially because the market keeps fluctuating and U-turning in ways that we are not being able to do much about. And even though the week started on a relatively neutral way, then and of course talking here about the Nasdaq and of course and subsequently talking about the QQQ, the shares of QQQ. If you see here, and this is where the week basically started. It started again, as I mentioned in the previous video, in a fairly neutral way, but then once we hit Wednesday, things had turned for the worst. And as I did my latest video on Wednesday evening, as I mentioned, it was more or less at this point at which we were recording the video. Here I sold another call. I rolled over the calls that I had sold previously because they were already close to zero in terms of value, and then out of nowhere something happened which I had no idea, and I could not determine afterwards basically what happened. But the market completely turned against us here, and we are talking here in the dying minutes of the session. So this was around half an hour, 45 minutes before the session ended, and markets simply did a strong U-turn, and the calls that we sold basically became super valuable. And in order for us to avoid having to sell the shares of QQQ that we have and realize a very large loss, basically we had to buy those calls, and by doing so we managed to take in a loss on this trade of around 900 euros. And because of that, we ended up negative for the week at around $483, give or take. And so because of this situation, basically what we are going to do from here on in, and this is something that I already did on Thursday, the last day, will be basically we are going to input the trade, our normal trades for the QQQ, but because the market is so volatile at the moment, we are going to protect ourselves by using stop losses. And so by doing that, it's sometimes it will, even with stop losses, things may go our way, but they also may not, because if, for example, we of course we submit an order to the market with a stop loss, and then if the market goes slightly against us, this can trigger the stop loss, and so we are out. The calls are sold are bought back at a loss. And then if the market subsequently and the value of the option subsequently comes down because of the time value, and the loss of time value is very significant when we are talking about 0 DT options, we'll basically lock in a loss, and there's nothing we can do about it because we are already out of the position, and then the continue then goes in our favor if we would have stayed. So this is going to be a bit of a risk, but given the circumstances, I think it's still worthwhile, because that is the best way for us to protect against these large losses that sometimes occur. Because as you can see here, and of course over the course of this challenge I showed these numbers many times, the key here is to keep accruing small gains and small premiums over here, and all it takes is one large loss to undo all these small gains. And so even if we are winning a lot of times a little, it only takes one loss to put us completely in the red. And so in the key here is to avoid these large losses. And so we need to use these stop losses to avoid precisely those big losses, even if it will sometimes go against us. And because, for example, in this case, I bought back this call, as you can see here, this 453 call on Thursday with a profit, and then I sold another call with a premium of 9 cents at 446. And here, as you can see, on the last day, yeah, this is it. So I sold a call here for the strike price of around 446, and this was somewhere around here. But and then of course I use a stop loss again, but because the price started going against us, this increased the value of the calls and triggered the stop loss, even though the strike price never was achieved, was never reached. And so if we didn't have the stop loss, we would have stayed in the position and we would have profit, but instead we took a loss. But I think this is the way that we should go, because basically what happened is that from 9 cents it touched on the stop loss, which was 17 cents that I had defined, and it basically sold or bought back. And so I know these situations can occur. If we didn't put the stop loss, we could have still gained, we would have still gained the position. But the key here is to avoid these large losses that can happen from time to time, and it will undo all or a lot of those small gains that we had for many days and weeks in a row. And so I think this is a decision that we had to make in order to prevent these things from happening again, because all it takes is one bad decision, or one decision which is right, but the market makes a U-turn and it undoes all our work. But yeah, these turnarounds at the end of the session also tell me that from now on, if the premium that we receive is rather low because we are at the end of the session, we're simply not going to trade. Because if the market goes against us, and sometimes this happens, the market in the dying moments makes a U-turn, the reward is not worth the risk. And so basically in these situations, and as you can see here in the initial call, we sold the call with a strike price of 453. We bought these calls back right at the end of the session. Here you will be able to see, yeah, this is where we bought. So we bought this with around 18 minutes left in the session at 9:57 local time, where we are, Central Europe. And so the premiums available for the calls that we can sell again are very low. And so at this point in time, for the future, we will not buy back these options, because this was precisely the moment in time in which they could have been bought back at 1 cent. At this point, we will not go back and buy those back. We'll simply let it die worthless at the end of the session, and that's it. Because that is the best approach for us to avoid having to do more trades and putting stop losses for trades which are not worthwhile the risk. And so yeah, for QQQ this is it. For Pfizer, it was a rather positive week. It recovered somewhat, but still, it's still some time away from where we wanted to be, because we needed to stay much closer to the $26 mark. And so basically, as I mentioned, the plan is to, whenever we have more funds available, we will buy more shares at around the current price, $22, $21, $23, lower the average price, and then try to sell at a lower price in order to break even, keeping in mind, or of course, that we sold already some shares of Pfizer at a loss, as you can see here. But of course, we are underperforming relative to the market. That's pretty obvious. But for now on, we are taking the measures necessary to prevent this thing from happening again. And so, yeah, for sure, at least these large losses will be mitigated to a point in which it will not make a huge dent in our realized gains already. And for next week, market will be open as normal, 5 trading days, and so we'll have to wait and see what happens. For the time being, this is all. Feel free to leave your comments in the comment section below. Also, I'm available on LinkedIn in case you want to send me a DM with any questions or comments. And of course, feel free to like the video and subscribe to the channel. And we will be back tomorrow on Monday to start the week number 39 in this challenge. And I'll see you there.